Hello friends, this is Raj Sastry from Raj Option Trading. Today is April 19, 2022. Let's take a look at Blackstone. So Blackstone is a asset management company, ticker symbol BX, and stock has been not doing great off rate. Look, it's down 13% year to date and down 25% from 52-week high. So at this time, we got to go into this company and see if it's worth buying. And Blackstone invests for the long haul, as you can see here, and they want to build successful, resilient businesses. And it's been accelerating the growth and helping the communities. It's also a leader when it comes to ESG, doing well for the environment. And they're also helping the tenants to reduce the rent. That's also a great one here. So overall, a great company. And right now it's trending down. So that's when we jump in and see if it's worth buying up here. All right, so let's look at the company into a little more detail. Look, it's got a 72% approval rating. The CEO has got 72% approval rating from its employees. That's a very good number for an asset management company. And we got seasoned leader here, Stephen Schwarzman. He's a chairman, CEO, and co-founder. I love when the co-founder is still at the helm. This guy is doing great, and he's a seasoned hand. And he's been the chairman, co-founder, and leading leader here. And look, he has been with the company since he founded it from 1985. So he's a seasoned hand. He's involved in all phases, and he knows what's going on. So with that, let's go into some more details. Look, from a financial perspective, from a numbers perspective, they're doing great, and they got free related earnings here, 71% year over year. That's a great performance here. And from a segmented distributable earnings here, they're up 89% year over year. That's also doing well. So they're doing well overall. And look, from a earnings per share rated perspective, nice growth here. Look, from a 52% back in 2020, they're up 56%. That's a good improvement here. And look, they got a balanced portfolio. Their biggest portfolio segment is real estate. Next is private equity, then hedge fund solutions, and finally credit and insurance. So this will provide them very good balanced portfolio, so that way they can grow well and take advantage of market conditions. And when the real estate is down, they are not afraid to buy more real estate like they're doing right now. And when the interest rates are high, their credit and insurance segment can grow well. So they got a lot of cash. They can invest them when the markets are down. That's what they're doing. They know when to invest and grow their business. All right, so let's look into this company a little more here. We got Blackstone BX, as you can see here. It's a leader in alternative investment and asset management. They specialize in real estate, private equity, hedge fund solutions, credit, and so on and so forth. And look, stock price is at $111 and almost $112. Ticker symbol BX, and it's a $81 billion market cap. Pretty good market cap. They're down from 1 year performance perspective, down 13%, and they're down from 52-week high by 25%. Look, stock has been doing great back in 2020. Look at the run in 2020, great run. And now comes 2022, somewhere along here, and even back in 2020, look, from December onwards, stock has been stalling. Look, nice downturn and nice down candle here, and it went higher. Now it's trying to consolidate and go higher. Look, I think we are at a good situation here, around 111 or even 110. Could be a good buy to slowly buy this great company. They typically take some breather. Look, they took a breather back in 2020, the COVID time frame. Then stock went higher, took a little breather once in a while. All this breather is a good buying opportunity. It's a weekly chart here, that's why it's not a daily chart. But at these levels here, call me a buyer around 100, 110, 111. It's a great buy. It also pays a good dividend. So if you're a retiree or if you love dividend investing, this is a great one to buy. And analysts are saying moderate buy here. We got 7 analysts saying buy, 4 hold, and nobody says sells. That's a good one here. And look, this company is taking advantage of market situation here and buying real estate right now when the real estate is down. They're buying American campus for 12.8 billion, and they're also very opportunistic. They're expanding their downtown Manhattan office space here. That's a good one here. And they're buying properties in Italy. That's also a good one here. Overall, this company knows when to make deals and get good deals done when the market is not so great. So that's how they grow for the long haul. All right, now let's go into some more details here. Let's look at the target price. From a target price perspective, Blackstone, ticker symbol BX, price is about $112. Market cap is $81 billion, as you can see here, down 25% from 52-week high. From an analyst target perspective, the high-end target is 186 here, very big appreciation from the current price, and the low target is 107, still higher than the current price, and the mid target is 151. That tells you analysts are bullish on this company. They are bidding this company higher from a target price perspective. And look, we got 11 sell-side analysts who offered a 12-month price target. I think it's a good appreciation. Look, we got a prediction of 33.81 increase from today. That's a good one here. From an analyst perspective, there are 8 sell-side analysts here and 13 EPS analysts. And we got consensus estimate right now 1.85, which is slightly lower than 1 month ago. The estimate lower the better. It's on a 1 to 5 scale. It slightly came down, from a recommendation perspective, but it's a good one to buy. And from a technical perspective, it's a screaming strong sell, as you can see here. And from a analyst perspective, fundamental perspective, it's a screaming buy or a buy. So when there's a divergence between what technicals say and what analysts say, I kind of look at analyst rating when it's buy, when it's a sell from a technical perspective. That's what interests me. I will start slowly buying, take care of the situation where fundamentally great companies, you're getting at a bargain price. That's when you accumulate. And look, stock is at $111. They're down from the 10-day SMA here, or simple moving average, by 1%, and they're down. It's a 5-day SMA by 1%, 10-day SMA by 5%. They've been down from a moving average perspective. That's when you start slowly accumulating great companies when they're down like this, but still great recommendation or a great fundamentals. All right, let's go into some more detail here. Let's look at Blackstone and the competitive landscape. From a competitive landscape perspective, look, we got BLK here, one of my favorite stock here. Look, it's a biggest market cap when it comes to capital asset, $103 billion. And this company, even this big company, look, it's growing nicely here, 31% net margin. And look, it's got a nice performance in 2-year and 5-year. And look at the cash, they got $9 billion and nice free cash flow. And the overall score is 45, which is the middle of the pack, I say. And then you got BAM, Brookfield. I think many of you know this company. It's one of the great company here. They've been, dealing very well, making some great deals. It's the next biggest market cap, $84 billion. Look at the gross margin and net margin. Net margin is not so great like BlackRock here. A little bit low, less, net margin. But company has been doing okay in a 2-year and 5-year time frame here. And look, stock is sold off late, like many other asset companies. And next is the company that we will be talking about in more detail, Blackstone. It's one of the great companies. Look at the performance here. This company has done much better in 2-year and 5-year than BlackRock as well as BAM. And it's got nice cash, $2 billion cash. More importantly, nice free cash flow, and overall score is great. It's 82, one of the highest here. And this company has done has 35% net margin, which is great. And look, stock is sold off with the low RSI at 40 here, so it's a good one to buy. And we got few more here. We'll not talk about all the stocks here. Look at the stock with the high overall rating, higher the better. We got TROW price here, nice and high overall rating, 82 here. You could look at this one also, nice net margin, 40% as you can see here. And we got few more here. Keep watching the overall score here. Look, we got one more with nice overall score here. I think it's right here, look, we got SEIC here. It's also a great one here, nice overall score of 81 here, and nice net margin of 29. And we got one more right here. I think it could be AB here. AB has got a nice net overall score, 85 here. Stock has been doing great in 1 year and 5 year. And we got last but not least PSEC here. PSEC is a $8 stock. Look, nice overall score of 94 here, and stock has been doing pretty okay in 2 year and 5 year. You could look at this one also. As usual, keep watching the net margin, higher the better. All right, now what we'll do is we'll look at Blackstone in little more detail. So look, from Blackstone, the stock has been doing great. Look at the earnings per share here. Nice trend up. I love this trend up here. And look, from a sales perspective, nice trend up here. And they're not polluting or diluting the share count. It's pretty consistent, slightly higher, but it's not a big deal here. And I know many of your dividend investors, look, dividends per share is consistently going higher. So if you're a retiree or love dividend investing, this is a stock for you. This stock pays good dividend. And from a net margin perspective, nice appreciation in net margin. That's good here. And they're paying down the debt. Debt to equity is coming down. That's also a good trend here. Overall, I think from a numbers perspective, this company checks out. All right, now let's look at earnings history of BX. From an earnings history perspective, look, they've been beating many times on the EPS here, earnings per share. They had some miss, as you can see here, back in 2020 during the COVID days. But overall, they've done well. And during the last interest rate hike here, they did have some impact. As you can see here, they missed slightly here back in 2018 when there is a interest rate worry and Fed hike. They missed slightly, but I think overall they're doing very well. And look at the revenue here. Back 2017, revenue was 1.51 billion. Now it's a $4 billion revenue company. Revenue is increasing nicely, as you can see here. That's a nice trend up here. I like it. And they've been surprising Wall Street on the earnings here. Look, a nice earnings beat many times. There are some challenges during COVID days, as you can see here. And they're doing very well year over year from a earnings, from a sales or a revenue perspective. Revenue is increasing year over year. That's also great here. From a earnings history perspective, this company is mostly consistent and they surprise on the higher side with some miss when the broader market dips, like you can see during the COVID days. So with that, overall, I think it's a good story, and they know how to manage these earnings reports and how to manage analyst expectations. All right, now let's look at the monthly performance metric. I love to see these type of charts. It tells you a good idea. Look what's going on here. 2022 stock has been down in February by 5% and April so far by 12% already. And for the year, they're down 11%. And look, last year they had a great year, up 105%, as you can see here. And look, they were down back in February slightly and September slightly. And then 2020, they're up 16%. 2019, nice up. Look here, nice 86% up. And 2018 was the interest rate fear. Interest rates went higher. They did down here, but after they were down 8%, they came back with nice surprise here, nice upswing here. And look, 2016 was down, 2017 was up. So this is one of those companies when they're down 1 year, like 2016, up nicely following year, down 2018, up 2019, up 2020, up 2021, down 2022. You can expect nice bounce back from these levels. It's very predictable that way. That's why this huge 11% down here. You can expect nice bounce back. It's done nicely, as you can see here in past 3 years. It's only natural for this stock to take some breather and then make its next leg higher. All right, now let's look at the stock chart here. From a stock chart perspective, look at this nice growth here. It's a 5-year weekly chart here. Nice bull run. Look, nice bull run here. I love this nice bull run here. Right now stock is breathing. Look, nice breathing here. And look, there's a nice support level somewhere right here around 110. There's a good support level here. And right now stock is at 111 here, so I can expect stock to really bounce around 110 and consolidate there and make it move higher. That's how it's set up at this time. All right, now let's look at BX here. Look at the stock chart. From a stock chart perspective, look, nice consolidation level here. Nice look, we got around $110 or so. Nice support level here. And then you can look at RSI here. RSI is momentum is wondering where to go. It's right now momentum is down or flat, as you can see here. I can see this going higher. Volatility is high. Look, IV percentile is 71%. So if you're one of those guys who love to sell put option, you could sell some put option below the stock price and make some good money. Earnings is around the corner. That's one of the reason implied volatility percentile is high. So you got to be careful around the earnings. But in general, when the stock is down, as you can see here, before the earnings, it tends to go higher. Stock is down before the earnings, went higher. So it looks like right now it's set up to go higher because stock is already pulled back nicely before the earning. And look, right now from a DMI, directional movement index perspective, stock is bearish with red line on the top and blue line on the bottom. And on the balance volume perspective, it's pretty steady here. Folks are wondering whether to buy or sell. That's why it's pretty steady and slightly downtrend. Smart money right now it's pulling out, as you can see here. But this can turn around. Look, smart money pulled out, went back up again. So it's really a zigzag pattern. When the market sells off like this, typically smart money or check-in money flow tends to go down and then it will reverse the course. So that's when it's a good time to slowly accumulate and go from there. All right, now let's look at the Bollinger Band. From Bollinger Band perspective, look, whenever it hit the lower band here, that's a good buying opportunity. Hit the lower band, went higher. Resistance, as you can see around the top here, came down, hit the lower band, went higher, hit the lower band again, went higher. Looks like there's a nice resistance level at the top here. Now it's trying to bounce off from the lower band here. That's when it's a good buy here. I can see it bouncing off from the lower band and then go higher. And look, from a volatility is increasing right now. We got implied volatility racing, mainly because earnings is around the corner. And we got VWAP around 112. That tells you stock wants to go higher, even though currently it's 112.99. This VWAP tells you there's an upward tendency here for the stock to go a little higher from here. All right, now let's look at option market. So in the option market, look, current stock price is 111 and we got here 52-week high 149. Nice room to grow here. 52-week low 78. Look, it has gone lower in the 52-week time frame here. And currently, as you can see, your stock price 110 here. At 110, we got 102 call open interest here. And look here, as you go higher, around 130, 135, nice and high open interest here. That tells you folks are buying call options with the out of the money call options at 120, 125, 130, and they're expecting the stock will go higher. And look even further at 180. Strike price, we got nice open interest here. That tells you folks are buying at cheap price. Look, price is very low here at around 70 cents here, and they're buying at these levels also here. That tells you folks are really paying very low money here, around 37 cents, which is the mark, and they're buying these cheap out of the money call options. Their expectation is stock will go higher, they can make some good money. They're paying very low price, 37 cents here. So that's how it's set up in the option market. There is a more call open interest, and look here, call open interest here, and look at the put open interest. There is some, but it's not as high as call open interest. All right, now let's look at the put call ratio. From put call ratio perspective, look, number of calls traded, 7,500 contracts, number of puts traded, 3,300 contracts here. That makes a put call ratio around 0.4. That's bullish. Typically I don't recommend buying call options on these dividend paying stocks, but when it's down like this, it may be okay. But I say if you're a long-term investor, just buy the stock. Typically dividend paying stocks, it's good to buy the stock than going into call options. All right, now let's go into what should I do now. So Blackstone, it's buying American Campus for $12.8 billion. Whenever there's an acquisition like this happening, typically company comes down. That's what is going on here. Acquiree comes down. That's what is going on here. And this company signs the deal to expand its offices in Manhattan. That's the good news here. This company is taking advantage of market situations. And look, their operating companies reported 23% year-over-year growth. That's a good number here. I think it's a good growth here. And look, they got 23% up revenues. That's also good here. And they have many of these companies saw margin expansions. That's also good here. So overall, companies humming pretty well, and they're doing very well. And as the interest rates move higher in response to inflation, this company will expect the returns to benefit, because they also have corporate credit, which is a floating rate of debt. As the interest rate go higher, they can get some more interest income. That's why for this company, higher inflation, higher interest rates can help this company also, and they can get a better rate. And look, while the rate can be headwind for liquid markets, but this company has got a lot of dry capital. They got free money available here, $136 billion dry capital. And this dry powder across the firm, it can help the company to become more favorable, because they got a lot of this dry capital here. They can take advantage and make some deal, and they can get better rates. And company's got proven record, and I say, buy the dips here. It's a well-run company. The co-founder, CEO, and chairman still at the helm here. He's a seasoned hand. I say buy the dips, especially if you're a dividend investor. It's a great company to buy at these levels here. So with that, thank you very much. Happy investing and trading. Please subscribe.